For improved system performance, long-term financial returns, and less risk on your PV projects, look to the proven performance of DuPont Materials and Solutions.
Hello and welcome to another episode of PV Newscast. Coming up, Solarhybrid files for bankruptcy, EPIA demands stronger solar policy from EU, and ReneSola offers aggressive shipment guidance for 2012. The US Department of Commerce has released its preliminary determination on countervailing on imports of crystalline silicon PV modules and cells from China. The DOC will impose a subsidy ranging between 2.9 and 4.73% on Chinese producers and exporters. Many analysts had expected subsidies in the range of 20 to 30%. Suntech and Trina Solar appear to have been singled out, with Suntech having received 2.9% duty and Trina a higher duty of 4.73%. All other Chinese companies will receive 3.61% duty. The determination is actually only the first step and is subject to further examination and final determination later this year. On May the 16th, the decision on anti-dumping customs duties is expected to be announced. Once again, we've seen a week in which another PV company files for bankruptcy, and the solar shakeout continues. This time, German PV project developer Solarhybrid has filed for insolvency in the local court of Arnsberg in Germany. In a brief statement, the company said that it had opened insolvency proceedings in relation to the assets of the company due to illiquidity issues. Solarhybrid had recently been highly active in building a project pipeline in the US and Israel, having acquired the majority of bankrupt Solar Millennium's US planned projects, estimated to be in the region of over 2 gigawatt, as well as 200 megawatt pipeline from another bankrupt firm in Israel, Sunday Energy. The European Photovoltaic Industrial Association is demanding that the European Union develop a competitive and specific policy for PV in Europe that includes a favourable long-term policy framework. On a cautionary note, the report states as new markets open to solar PV and competition intensifies globally, the EU will need to become increasingly vigilant to ensure that competition in new markets is based on free and fair principles. The association believes that a more tailor-made and sector-specific approach is needed in order to develop a forward-looking industrial policy for PV in Europe. Feed-in tariff cuts in Germany and other European countries could lead to a decline in the global PV market this year, according to the annual PV market report produced by NPD Solarbuzz. As a result, average crystalline silicon module factory gate prices in 2012 could decline a further 29% compared to last year, a higher decline than many PV manufacturers had expected. The market research firm also noted that global PV installations reached a record 27.4 gigawatt in 2011, a 40% increase year on year. Though emerging markets are expected to grow strongly this year, the reduction in European demand could cause the first market decline in over a decade. On a regional basis, the report noted that the top 5 PV markets last year were Germany, Italy, China, the US and France, combined accounting for 74% of global demand. The fastest growing market was China, which experienced installation growth of 470%, climbing from 7th largest market to 3rd place. And finally, several more Tier 1 producers released financial results this week, including JA Solar, ReneSola, and revised guidance from LDK Solar. JA Solar reported higher than expected product shipments that included cells and modules for the fourth quarter, which reached 398 megawatts, still well below third quarter figures. The company made a loss of $77.5 million, but first full-year revenue reached $1.7 billion, with shipments of approximately 1.69 gigawatt. JA Solar is expanding module capacity and planned shipments in 2012 on the back of its high-performance cell technology, making up 50% of shipments. ReneSola also exceeded shipment guidance for solar wafers and modules in the fourth quarter. The company reported 2011 revenue higher than guided at $985.3 million. That was 18.3% below 2010, net revenue of $1.2 billion. Total solar wafer shipments in 2011 increased 14.3% to just over a gigawatt due to increased demand for its quasi-mono vitreous wafers. However, citing further pricing pressures in the fourth quarter, LDK Solar revised down financial guidance and warned of further inventory write-downs, expected to be from its polysilicon production operations. The company has already made several downward amendments to its expected quarterly results in 2011, resulting in excess of $1 billion wiped off expected revenue and over 1 gigawatt in expected wafer shipments alone. The company said that revenue in the fourth quarter would be in the range of $440 to $450 million, down significantly from $440 million to $520 million previously guided. Well, that brings us to the end of this week's newscast. Don't forget, you can stay up to date with all the latest PV news by following us on Twitter and regularly checking the website. Until the next time, goodbye.